numbers have landed on U.S. inflation. They are softer than expected. The annual pace of inflation in the month of February, 2.8%, 2.9% was expected, and that 2.8% is a retreat from 3.0% in January. So inflation, the annual pace of inflation recedes from January, and in fact recedes more than analysts had expected. The monthly pace of inflation, that's from January to February, comes in at 0.2%. That's also 10 basis points shy of what analysts had expected. And you see the same thing when you exclude food and energy. The headline number and the core number on a monthly basis are the same, growth of 0.2% over the course of the month. And even on an annual basis, when you exclude food and energy, you get a core inflation rate of 3.1% from February of last year to February of this year. That also 10 basis points lighter than expected. So the takeaway here is that inflation has landed more softly in the United States than expected. And there you see reaction in the currency market, the U.S. dollar losing some ground against major international currencies as the currency market now bets that there's less incentive for the U.S. Federal Reserve to certainly raise interest rates. And I guess the market is betting that a rate cut from the Fed is becoming a little bit more likely with muted inflation. And there's the S&P 500 contract jumping up by about 1.3%. Bill Harris, any quick reaction to the numbers?
Yeah, that's not a huge move. It is interesting to see what way the market really wanted to move on something that looks incremental. I think what's so hard is that there's going to be big inputs on inflation in the next 3 to 6 months that are not in this number.
Right.
So that's what the tricky thing. Where are we going is far more important. I don't think there's going to be a whole lot in this number.
Right. The tariff impact is still several months away. Bill Harris on the inflation numbers. Now, our latest headlines.